What's up, guys? Hope you guys having a good day. Well, I messed up today. I'm gonna be straight with you guys. I actually did not stick with my strategy for the first time in a little over 2 weeks. So I'm annoyed with myself. I'm disappointed because I averaged up in the worst way possible when I told myself I wouldn't do it anymore. So yeah, I'm gonna break it down. I guess if you want to look at one good part, I guess I'm still up $176. I am taking this serious. I'm just trying not to beat myself too much about this. I am just trying to let this be a very good learning experience, especially because besides those 12 green days in a row I also had two other green days. So in reality, I've had 14 green days, 13 to 14 green days out of like three using this 15-minute open range breakout strategy. So 14 out of three, I really can't complain. Now, could I do done things differently with my losses? For sure, without a doubt. I could have set my stop loss with some of them. I could have just, cut my losses instead of being impatient. There was one day where I did hold, and it was the biggest loss I've taken in a single trade in almost a good year, and that was $750. I'm pretty sure it was actually earlier this week. But yeah, let me get back into the trade and show you guys what happened. So first 15 minute, we had a high at 287, had a low at 224. What a coincidence that it bounced off the moving average. Couldn't say that shit to save my life. But so this is actually where I saw it. It was actually like a textbook perfect setup for a pullback. So we get rejected, and if you guys actually noticed, now this is around pre-market right here, but look where we got rejected again at the same time. 285. So not only did we get it rejected once, we also got rejected twice. So when we broke below the EMA and we bounced off the moving average, I was like, dude, if we get rejected at this EMA and we pull and we we break above just for a second and pull right back down, I was like, that is like a textbook setup for a beautiful pullback or even a sell off. And that's what I did. So I'm going to zoom in real quick so that way you guys can see the candles better. So right here is actually where I went to go fill an order. I went to go sell market, but I didn't really get filled until I was around right here at around 242, 245. Now, as you can see, we held above the EMA, and it was about right here. We had this red candle. We barely cracked the EMA. And now, if you do look real quick, we hit right here at 267. When we went to go push up just for that split second, we hit that 262. So for that split 30 seconds, that good minute, in my head, I was like, you know what? We're really hitting another lower high. We hit a lower high right here after getting rejected at this range, not once, but twice. So when we started to when we actually cracked it again, I was very confident in going short. And that's why I averaged up. Now I did average up in the worst way possible. You should never average up. Like let's say I go like, let me give an instance. For instance, let's say I go long right here. Okay, if we pull back to right here, I should not go long again. I should not average up. Like, okay, I get it. I get the whole point is, oh well, my average price will be better if it does recover. Keyword does. See, that's the problem. And I've done this so many times. And I'm doing it less and less and less, which is good. A year ago I was doing it like multiple times a week. Now I'm doing it every other week. But, you know, just averaging price, guys, it's a tricky thing. But at the end of the day, what I've noticed has helped me the most is I never average up until we get a continuation. Like, for instance, let's say I go long right here. We pull back. I need to be ready to cut losses, one. And if we and as you can see, we did recover. The moment we started indicating higher highs above this 322, because it got rejected at 320, sorry. The moment we start showing higher highs above 320, then we can average up. Makes more sense. But as you can tell, I did not do that, and that's what led to my $1,000 loss for the day. It was off of one trade, and I just averaged up horribly. Now, besides doing this too on this Top Step funded, like I'm on a combine account because I'm working on getting a funded 50K account back for the third time. So the first time, guys, I don't know if I ever talked about this. The first time I had a funded account, I literally had it for I think 2 or 3 days. And then the second time I got it back about a month later. And I held that from June to last month. So June, July, August, September. So about 4 months I held it. Actually, no, 5 months. Yeah, I held it for about 4.5 to 5 months, and then I lost it. And I just got sloppy. I stopped taking it serious. I wasn't paying myself that often. I wasn't sticking to my end goal. And I've mentioned this before about a month ago, where I was like, at the end of the day, I don't want this to be my sole thing. I don't want to make money from another, like a prop firm. What I'm going to do is get the funded account back. Once I get that funded account back, start paying myself. The moment I meet the requirements to pay myself, and that's just really one thing, have 5 green days, non-consecutive, that are at least more than $200 or more profitable. That's pretty damn reasonable when it comes to this, when it comes to futures, especially the E-mini Nasdaq 100 since it's 29x leveraged. But, get to a point where I pay myself every week if I can, if not every other week, or one big time a month, and start putting that money back into my Webull account and going back to trading TQs and SQs. And I even thought about asking guys if I could get any feedback. I would like to start doing like $100 challenge. And that means I would put $100 in my Webull account right now, and that's all I would trade with. And I would show you guys my growth and my failures for the next 6 months. And if I get to the point where I'm up like $400 or $500 in the next 6 months, awesome. And if I get to the point where I am below $100, then there's a lot of lessons for me to learn, and same for you. So I would really like to do that, and I've been thinking about doing it later this week or the beginning of next week, and just keep you guys somewhat updated on this. I am getting tired of futures. I do love futures, but it's just so quick to lose money. And I don't know why. I've heard it from a few of my friends too, that I have a really hard time averaging up when it comes to futures, especially in the right way. I know that's sort of a given, especially what I just said, but I'm definitely not perfect anyway, so definitely something I can work on, that's for sure. But yeah, I mean, Nasdaq had a really nice run up this today for about the first hour and a half. Trying to zoom out real quick. Yeah, hit a high of 401. Went on an amazing rally. And I mean, even right here, guys, this is also what I want to talk about too, is my strategy. Because I did draw my lines, as you can see. Look what happened. We break above. We pull back a little bit. Hit higher highs at around 320. We pull back, bounce off the EMA, and we barely break below for 3 minutes, maybe 4 at the most. And we held it and just went and continued hitting higher highs and lower highs. I mean, higher highs. But yeah, I mean, perfect setup. Like this is the most perfect setup to me when it comes to this 15-minute open range breakout strategy. This is what I have been waiting for, and I screwed it up. I woke up a little late, was impatient, was eager to trade, ready to pull the trigger at a moment notice, and I just, I got bit. And this is one of those days where the market really reminds me, like, hey, you can make a lot of money, but we'll humble the hell out of you real quick. And that's one thing that like I have to remind myself, I go on these nice little green streaks and I get all confident. I'm like, oh yeah, I got it. And then the market humbles me, I get a little too my risk gets too shitty or something like that, or it's just one of those things, man. But I just wanted to show you guys the big lesson I learned today, and that's just, always understand that don't get too cocky. The market will humble you. And, there's no reason for me to go outside the strategy. Like I said, 14 for 30. I mean, that's That's damn good to me, for the least. If you really think about it, that's 17 days. There's really at most like 20, 21 days out of the month that you can trade. That's over 90% of the month right there. You go 14 for 3. All I really need to do now is just keep those 3 days small. Don't let those 3 days be $900, $800, $1,000. I mean, 2 of those days were $1,000 losses. I could be done with this challenge right now. And I want you guys to learn from like the mistakes I've made. But, you know, definitely a lot of things I could have done differently. And some things I'm definitely going to think over tonight and the rest of the week. And I'm definitely going to stick to this strategy. But risk of reward is starting to, be a constant reminder to me, Like, okay, I'm up $176, but at one point I was up $2,600. I was up almost 6%. I was up like over 5.5% at one point. I had like 0.5% to go. And look where I am because of risk management. My risk management was shit, and this is what you see now. Instead of $52,600, which you guys have seen before a few weeks ago, and now look, just up $176 because my risk is shit. So I got plenty to learn, and I'm definitely going to learn from my mistakes, and I'm just going to keep you guys updated. I hope you guys have a good day. If you guys get any questions or any recommendation for future videos, especially me doing that $100 challenge on Webull on my own personal brokerage account, please comment below. If you guys enjoyed this video, it's much appreciated if you like and subscribe. I'll see you guys tomorrow.